and welcome to another episode of Technology Heroes Unplugged at Capital Club Dubai. With headlines in recent days focusing on the liability of trading platforms like Robinhood, and all of us watching very carefully at the increasing valuations of Bitcoin creeping past $1 trillion, banks have been busy working on how those digital channels can take on even more customers, which will require more and more personalized data insights. But there is an opportunity, and that is those 1.7 billion people globally who are not financially inclusive. And in these COVID times, those ripples are being felt to why identity matters even more. And therefore, we felt it'd be great to have a discussion tonight on how digital identity and financial inclusion remains a digital gambit for many. So it's therefore a privilege to have with us today three leaders who help drive organizations towards solutions for customers in the region. They are Rajeev Kakar, banker and board member, founder of Dunya Finance, co-founder Fullerton Financial, and former CEO of Citibank, Turkey and Middle East Africa. Sagheer Mufti, the group CEO of HBL, who earlier spent 33 years with Citibank globally and held multiple leadership roles. And of course, James Tebbs, a partner at Grant Thornton, focused on solving financial crime with clients. Welcome to all of you. It's a privilege to have you here tonight with us, and looking forward to the discussion on why digital identity matters and how it will be relevant to financial inclusion. If I can just set the scene first of all by talking about some of the changes we've seen already in 2021, which may not sit within self-sovereign identity at this point. If we go across to Australia, we've all been watching how the regulators there have been involved in a standoff where they're reeling in a standoff with Facebook in how big tech is showing its position on privacy and also content publishing, where they've refused to publish news content on their platforms as Facebook. And the Australian government, led by Scott Morrison, the Prime Minister, has not responded to Facebook threats and has basically pursued a line to introduce a new conduct for how compensation will be rewarded to content publication. Meanwhile, protecting your data and identity continues to be a very topical discussion as the drumbeat gets louder for how it can be secure. And it's really relevant where if you look across at Singapore in the last few months or weeks actually, there's some new legislation that's come in that you may know already, which is how under COVID-19, tracing data can now be used by the police for some criminal investigation in Singapore. And there was a bit of uproar over this. And just to top it all off, last year at this time, the Kenyan authorities, and you probably know this quite well, were actually involved in how they wanted to roll out a data identity program called the Huduma Namba. I hope I pronounced that right. And it went to court because they wanted to collect different types of biometric data. And the court ruled that yes, you can go ahead as long as you regulate to protect the data, but you will not collect citizens' DNA, and you will not collect any location data of those citizens as you build a profile of digital identity. So digital identity remains relevant. However, financial inclusion, which is the other side of the coin, isn't necessarily always a developing country problem, something we discussed on briefly as well. It's very much present in the developed world as well. So if you look at the UK, which I'd like to call home, there's an estimated 13 million low-income families in the UK, of whom up to 20% are financially not inclusive, okay? In fact, recent stats will say that even 9 million people in the UK don't have access to mainstream credit. And then if you go to Chicago, which is a town you know quite well, okay? The Chicago Booth Business School commented last year in something quite interesting. They said, it's not as if people are unbanked because they have hundreds of thousands of dollars under mattresses. They lack the resources to have a bank account, a problem many of you have dealt with in your lives. So, Sagheer, the first question to yourself then, I'd like to open up the discussion with yourself. Welcome, first of all. In a country of over 200 million, you're the group CEO of the largest bank in Pakistan, HBL. With over 30 million customers globally, I hope I got the numbers right. You've seen online banking transactions go up by 76%, and online users go up by almost 51%. Okay? So it's all very, very positive last 12 months, despite all the hard work. So staying on the macro impact, Sagheer, on the relevance of digital identity and financial inclusion, what's been the business continuity experience and business volume that you've seen as well as HBL in Pakistan? Over to you.
Naveed, thank you for having us, first of all. Honored to be here with this panel of some industry leaders and frankly, some friends. I've known Rajeev for a while, James for a while. It's a pleasure to be here having an exchange of views today. I think we need to step back and say, what are we talking about when we talk about digital identity? Remember, we live in a world where 4 billion people today have access to internet. That's 4 million access points. In that, it's who is the person, what is their online persona, and then, in addition to that, what do they access with that persona? That's what makes it interesting. So you're talking about a very large number of people now having ability to access various services from healthcare to financial services to social media through digital. And their access rights creates the trust in them to use digital. So what we're really talking about is how do we create trust in our customers to use digital? And let me now fast forward to the question you asked about COVID 2020. A year none of us want to look forward to. Everybody wants to forget about it. It's not a year I want to write about. But it was a very interesting exercise in management. Business continuity plans are made for very short term. And here you went into a business continuity plan, which is still continuing today. And digital identity was key to our ability to deal with it. For example, there was an internal aspect to it and an external aspect to it. Internally, within weeks, we had to mobilize over 5,000 staff to work from homes, from various places, giving them VPN access and making sure that they have access to customer data in a very secure way. Knowing where they are, moving them around to where you need them to be because of lockdown situations, and yet being able to provide service day in, day out to customers from morning till night. We have a large branches network. We have about 1,800 branches. And in COVID, we still operated 1,000 of them. So we went to 50% roughly. But with 50% branches, each branch having staff of 10, you're talking about giving access to 10,000 people every day. And we were moving them around like chess pieces. Where's the business coming? Where is COVID concentration high? How do we get our staff there? So internally, digital identity of knowing our customers' personas and then giving them access to the business for that day, for that week where they happen to be was a huge challenge, which could not have been done if we did not have the right access management systems, if we did not have the right ability to identify our customers and our staff and connect the two of them. Externally, you mentioned some of the numbers. I hate to break it to you, but you haven't been doing your reading. You're a quarter behind. You gave numbers for third quarter. We just published this week our full year numbers, and we doubled our registrations. Now, imagine existing customers we had, their volumes did shoot up something like 70%. Now, then there was the whole issue of resilience and giving them access rights to new services they wanted because they had been using their capabilities for limited services. And suddenly they realized they can't come to the bank, but they need to meet their financial needs. So they wanted to expand the menu of services, and that again brought in what? Access rights, knowing who your customer is, and remotely onboarding them for new transactions and services. And we were able to do that using biometric and frankly the national ID card in Pakistan. God bless the ID card. Because we have a database which allows us to validate every customer electronically, we were able to do that. In addition to the existing customers, we doubled the number of customers using our electronic platforms. How did we do that? In COVID, those customers could not be brought to a branch all the time. Some could come, some couldn't. So we enabled our ATMs to do biometric fingerprinting. We have a couple of thousand ATMs. So across the country, and Pakistan is a very large geography, very spread. You have the south, the sea, and you have the mountains, the Himalayas. We happen to have a branch at 14,000 feet at the China border. We were able to do biometric verification of our customers to onboard them across the country. So externally also, we were able to show we can provide services to our customers in a lockdown situation, onboard them when it would be very difficult to have a face-to-face conversation with them, all because of digital identity. So it was key to business resilience.
Okay. It's clear you've had a very good year, and a lot of hard work's gone into that, Sagheer. You mentioned a lot of keywords around national ID card, its validation, its impact, and the doubling of users on your platforms. I want to build on that, Rajeev, in the same question to you, keeping at a macro level. Now, you are an active founder of financial institutions, okay? You've also been the former CEO of Citibank in Middle East Africa and Turkey, but you also sit on the board of CIB Egypt, a very populous country of 100 million. So would you mind sharing, because all of us know identity comes into KYC and regulatory frameworks around KYC, but would you be able to share your perspective on what macro issues have the banking industry been dealing with in coming to terms with digital identity and financial inclusion?
So thanks, Naveed. I quite resonate the data that Sagheer's explanation is quite a case study, which defines the benefit. But let me go a step higher and not get specific about anything. But I'd like to respond to a couple of points you mentioned at the beginning. I don't think this is an emerging market problem, as you rightly mentioned, but I think we must understand the nature of the problem. A lot of the developed markets have unemployment as a problem. A lot of the emerging markets have underemployment as a problem. So there's disguised unemployment. So, I think we have a far bigger opportunity than, unfortunately, this entire talk about digital ID is being touted. Because, whether it's 3 to 13% or it's 13 to 50, I think we can make an exponential difference. And if there's one thing this period has taught us, or taught me at least, is we need to start thinking exponentially. There is disguised unemployment. Even when it comes to digital identity, thank God for national ID systems, which is right now helping people. But more importantly, a lot of people still don't have digital access, which we all are aware of. A lot of people who have access don't know what to do with it, and I think that's a very serious issue. And those who know what to do with it don't have enough to do with it. So then comes the issue of not just being unserved, it's also a question of being underserved. So when you add up and accumulate this, it's a huge, massive opportunity. Clearly, I guess this has given a fillip to people's ability to do what in 10 days what would normally have taken 10 months or 2 years, and people have needed to evolve. So I think human ingenuity just comes into play in a very good way. I guess if you speak specifically about the Egyptian market, it's a market that's been focusing, if you know, the Egyptian banking market is largely a corporate market and a very large populous economy. And similarly, that's the case in a lot of other economies. But still, a large section of the economy is not included into the mainstream when it comes to financial services. And financial services are also very critical, for other elements of inclusion. I think Sagheer mentioned it, I resonate with it, because for me, it shouldn't just be digital inclusion, it's got to be health, education, all the social challenges that people face. And so financial inclusion is getting an impetus for several reasons. And this is the process of convergent disruption that I talk about. You see, technologists tend to talk about IDs, and they talk about the technology behind it and blockchain and everything else. We'll get to the topics. But I think we have to realize the time has come where different stakeholders in the ecosystem are together converging. To use Thomas Friedman's line in 2004, the world is flat. I think the world is getting flatter. And it's only getting flatter because more and more governments, regulators, players, and everyone's realizing that the importance of getting people connected and creating an ecosystem which is interoperable, which can be trusted, which is verified, which comes with customer consent, is critical. So I think banks and boards are very heavily thinking about it. Work from home or flexi work is a concept that I think will always stay. But that's one end of it. We also equally have to make it very stakeholder-centric. I'm a big believer in segment-based businesses. We can't just make a standard offering and have a one-size-fits-all offer, because there are many people who are older and resourced but will never use it. My parents' generation would never use it. They find it difficult and daunting. There are people who are natives, people who are alien, and there are people who just won't do it. Okay. So all I'm trying to say is I would rather focus also on the intangibles. We can talk about the technology. So in places like Egypt, etc., we are focusing very heavily because of regulation, which is insisting that you start getting these people in. And this is true for every emerging market. This is true for all markets. Markets are no longer, or institutions or the financial system is no longer just impacted by economic and financial matters. It's now more and more impacted by political and social matters. And what we are talking about, inclusion, is actually being driven from the bottom and the top. So there's a demand in and there's a pull and a push approach. And fortunately, today technology exists, and governments have moved fast in being able to create IDs of that nature, whether it's sovereign or whether it's federated. But I guess what's really important is that there's been a growing realization that there is a need to create that persona, to use Sagheer's word, but more importantly, leverage it through the use of technology and to be able to empower it in a manner such that people can get everything that goes with the use of technology. So eKYC is, of course, the basic thing that Egypt is now moving forward, which countries like India have done very effectively. Payment systems are coming up where they've done things very effectively. But somebody's got to knit these things together. Otherwise, these become institution-specific initiatives, and each is trying to do it in terms of one-upmanship versus other. So my answer to that is, I think the focus is very strong from institutions, from boards, from regulators, from the customers themselves. There have been similar spurts of digitization. I personally don't like the word digitization because we get obsessed with technology when we talk about it. This is more about straight-through access, ease of access, making sure that you can get rid of intermediaries. And I think we need to, at some stage, the world is going to be fighting a war between incumbents and insurgents, where the banks are the incumbents, customers are holding the power on data, regulators want people to control it. And so the issues are far, far bigger than just the technology. So far, I think we are at a very early stage of evolution. This is a long journey. And right now, we're talking about enablement, then adoption, then cross-sell, then use, interoperability, and I think regulation.
So I've heard ID cards on both sides. Interoperability you've mentioned as well. Sagheer obviously was at pain to mention the doubling of numbers. James, we're not going to come to you with doubling of numbers. But given your focus on financial crime, you've been involved in many stress testing on different channels over the years, if not more recently. And one of the things that I'm conscious Sagheer and Rajeev have been involved in some days is how even KYC as a process has been relaxed in some geographies in recent times as well. So coming to you, how do you see the relevance of business continuity and trust in the financial community where digital identity is concerned?
Thanks, Naveed, and I'll echo the comments of the other panelists. Thanks for having me along. I think there's a risk in some of my answers, particularly here, that I seem like a bit of a naysayer, and that compliance can become a little bit of a negative connotation. So I will put across my views from a financial crime perspective, but I want those to be seen in the context of growth opportunity rather than a hindrance. And in a nutshell, that might be the issue here around financial crime compliance, is that the conflict potentially between enabling financial inclusion and enabling greater access for people who have very limited opportunity to create their own digital identity, and a traditional KYC model which doesn't like that scenario. And that's the basic problem we're dealing with here. And I think that's been recognized in a financial crime compliance context for some time. The FATF, for example, Financial Action Task Force, I'm sure I'll come back to at some point, issued papers on this a decade ago talking about financial inclusion. You also referenced, Naveed, rightly, the fact that there have been some relaxing of KYC controls recently, and I think it's worth noting those are designed to cope with the COVID pandemic situation, and they're not a general relaxing of regulation, and I think that's right. That's not to say that regulation doesn't need to change. I think it does. So what have we seen over the last 12 months or more of the pandemic? In many ways, a lot of the things that I have seen have been, from a threat perspective, have been old tricks with new toys, right, for want of the risk of coining a phrase. So, what technology has enabled people to do and what the pandemic has enabled people to do, if they're so minded, is to try and take advantage of others in different ways. So in the UAE, for example, there's been a lot of scams around things like employment schemes and so on, where people were defrauded through malicious or fake websites. There's been lots of phishing activities, and there's all sorts of statistics that will tell you how much that's gone up. They're all guesses, but it's manyfold. The reason why I mention that, again, at the risk of sounding overly negative, is what difference would digital identity make in that context, and what difference has it started to make? Well, ultimately, a lot of those types of situations are born out of an inability for one side to validate who the other party is. And that's the basics of digital identity. It's a trust concept which would enable either party to understand and validate and have some assurance over who they're dealing with. And if I relate that back to really basic fraud schemes, and And some of these seem basic, but there is quite a level of organisation behind them. I gave the example of employment scams. I was talking publicly about this almost exactly a year ago because there was a big organised activity in the UAE around this, where people were entering the pandemic, they were concerned about their employment, they were losing their jobs, they weren't sure what the future was, and along came a bunch of people who offered opportunity to change career for a small fee. And the money disappeared, and significant amounts of money were taken out. Fundamentally, all they were doing was impersonating somebody else, creating fictitious websites either for companies or for recruitment agencies. And the lack of trust, the lack of verification meant that those individuals believed they were doing business with somebody they weren't. So for me, digital identity has a huge role to play in that. I think there's clearly some statistics around the growth in GDP. There's a lot of statistics we'll probably come to around cost reduction with digital identity, particularly at the KYC stage. But fundamentally, financial crime compliance is about preventing criminal activity. And if you look at it from that perspective, that's where digital identity, in my view, has a real part to play.
I'll come back to the trust point again, because I'm going to break the mold of a professional discussion to go into the world of Hollywood and Tom Cruise. Because those of you who've watched Minority Report, he waves his eyeballs in a little bag at a camera to get into the room that he wants to get into because his ID is unique to him by showing his eyeballs, because it's trusted. And the ads speak to him as well as he walks past them. I'm not saying we're moving to that utopian situation of Minority Report in India or Pakistan or in the UAE, but identity and trust remains really important. Okay? So when I mention the word trust, it doesn't make sense for me to say, let's go on to the Bitcoin question now, because we are on the Bitcoin question. Trust is important. Bitcoin is arguable where the valuations of Bitcoins are going. However, if you look under the hood, you will see lots of blockchain working in all cryptocurrencies. And blockchain by itself fundamentally is responsible for more secure or distributed ledgers and verification in the supply chain. And there's endless numbers on how much efficiency and savings blockchain can bring in through the back door, in the back office and in the middle office. Okay? So if you just look at what Thailand's been doing as one example, they've already issued a blockchain-based e-wallet where it's nominal, only 6.42 million, but they're raising saving bonds with blockchain in Thailand with unique identification. They're also putting together a forum to build something called an ELG. You mentioned EKYC earlier. ELG. ELG is essentially an e-letter of guarantee using a blockchain platform to be able to provide more security. So given the development of blockchain, without me asking you what the price of Bitcoin will be next week, okay? You could tell me if you wanted to, but I won't ask you that question. Sagheer, the question to you is, how do you see blockchain or its equivalent in crypto providing any benefits, blockchain and benefits, that basically allow for the benefits to be appreciated by the industry that tomorrow could be turned into utility for it to be leveraged?
Okay. So happy to answer that. I have some very specific thoughts on that. But just to amuse you about Tom Cruise, we are launching our wealth management proposition. And when our customer will walk into one of our wealth management centers, something, Rajeev, you may remember called City Gold equivalent, there'll be facial recognition. And the customer will be recognized and welcomed by voice. And the alert will be sent to the relationship manager of that customer that your customer is in the lobby waiting for you. So we're getting there.
Without the mask.
But with a positive aspect,
Okay.
without the mask. Now coming back to blockchain, I'm a very strong believer in blockchain. I think it's around the corner, it's happening. You talked about Thailand. I think there's a very good example from Thailand I want to talk about and then take it to Pakistan. In Thailand, they're working on easy access to land records and credit records for people who are outside the banking system. So Thailand is a wonderful country, great food, great sports, lots of advancement in the last few years. But you'll be surprised to know 40% of the population in Thailand today is underserved for banking. 20% of the population is outside the banking system. That's like 7 million people in a country like Thailand. So when they are able to create easy access to credit records, it can help lending to those who need to be brought into the banking system. Now, let me take that to Pakistan for you. In Pakistan, one of the things we're doing is doing payments for farmers. We're working very closely with farmers to help them get access to financial resources because it's a huge problem for them. Most farmers in Pakistan rely on people who rip them off. And I'm going to get killed when I go back to Pakistan for saying that, but that's the fact. Farmers in the hands of people who charge them very high rates for providing them financial resources. Banking system, frankly, has been ignoring this problem, has not paid enough attention to it. HBL is paying attention to it. We are creating programs to launch for doing financing for farmers, helping them with their savings. Now, one of the things we need to figure out is when you finance a farmer, how do you get land records? So we have set up an electronic touch point with the Punjab Land Authority, which gives us access to all the land in Punjab. Now, that's a wonderful thing that the government of Punjab did. They set up the Land Authority. We were the first bank which have done an electronic link. I would very much like to see how we can work with them to adopt the Thailand model of blockchain, for example, to automate these records. Amazing, lot of productivity will come through. I think it's a perfect case study to do to help access for farmers for financing if we can create blockchain. I think it's ready, and it's one of the things we would be looking at working on. These are the type of things we want to work on and experiment with. So that's my answer to you on blockchain.
I think it's a great answer. And again, the urban example with farmers to rural as well is one that's relevant to all geographies, particularly also in India and in Africa as well as we speak. Rajeev, building on the same points from Sagheer and blockchain, I kind of know there's something called Ethereum. I won't ask you again what Ethereum's value will be next week. We'll ask you afterwards. But given blockchain's relevant and you have a line of sight on so many geographies of how banking is leveraging blockchain, to the example that Sagheer made on how essentially financing of land could be made more easier and accessible if some lessons were taken from Thailand and other countries. What do you see as financial inclusion, learning and beginning to take advantage of schemes like blockchain in the geographies that you have a visibility on?
So I guess I'm going to come back to the same old point. It's clearly, you know, all the technologies we're talking about are going to enable. Blockchain definitely, because it's all about collaboration, trust, a distributed ledger, gives you the benefit of great productivity, efficiency, instant reconciliation, non-duplication, all that works, right? And I think the challenge is, there's no question, regulators want it, companies want it. I want to step back a bit to what you said earlier and want to link it to what even Sagheer and the others have said. We have to realize that, and to James' point, you know, James's point that people don't like the data being taken. But people unknowingly have always had the data taken, unfortunately, right? And it's only much later when the cat's, out of the door or the horse is bolted that people are now reacting. And what has happened is, whether it's social media, whether it's Facebook, whether it's anything else, we've just been leaving an amazing amount of digital footprint, right? And whether it's our private lives, whether it's our transactions, whether it's information, our messages, and what is missing is a layer of governance around it, which frankly big tech has so far got away with. And every time, and given the dominance of big tech on the stock market.
Not for long, though.
No, not for long, yes, it's changing. But
Yeah.
I'm saying that's where regulators come in, like you saw the antitrust in Europe against Microsoft many years ago. We're seeing digital tax now. We're seeing some of the imposition on rules, etc., or what you talked about, the Australian example. However, regulation is critical, A, for protection, and B, for enablement. And I don't like over-regulation, but the right regulation I definitely like, and I subscribe to it. Coming back to the blockchain question, the issue is not technology. Unfortunately, most of the agenda gets sold by technologists, vendors, and people who have an agenda in selling the technology. And if I may take the liberty, even consultants who actually make a living out of obfuscating the client and using fancy words and then charging for time, and all for good reason. But it's a process of convergent disruption that starts.
I'm smiling because I can relate to that.
Yes, but I do want to make a point here. For the first time ever, once chaos sets in, that's when process comes in. So often the process of reform starts way before and the outcomes comes later. So without chaos, you're not going to build flyovers. Without chaos, you're not going to put red lights. You're not going to be able to create the right islands and the focus. So the point is we've now reached this perfect storm where there's enough data swirling around, people are getting aware, and who's creating this awareness? It is again with the tremendous weaponization of social media which has happened. I'm sorry, we've all lost our liberty. We don't think ourselves. Today, social media has created propaganda at a speed where it can educate you positively or negatively. And so a lot of this behavior or adoption or the lack of adoption or accepting or not accepting or even the views against using facial recognition or biometrics or the use of data, most people don't care a damn. Because as long as you believe that there's governance behind you, which will never allow your personal data to be misused, most of us don't care. We go to doctors, have ourselves physically examined, we don't mind. But we don't want our bodies displayed in areas that it shouldn't be done. 3 events have really majorly changed the world, according to me. 2001, 9/11, we lost our physical security. Mm-hmm. I mean, the governments have full access to where everything they want to know about us. 2008, we lost our financial privacy. Everything is known about our banks, everything is linked, whether it's CRS, whether it's FATCA, whether it's this or that or the other, everything is linked and will increasingly get linked. 2020, we've lost our health privacy. So we are now talking about digital health passes, we're talking about information. So like it or not, there's a ton of information which is now public. And people will use it. So technology for good is what Sagheer said. What we don't have effective, and we need a bipartisan approach or a convergent approach where all stakeholders understand that they have a part to play in accepting it, and there's a need for governance to establish a regulatory framework where people get the comfort that if you're flying in a plane, the pilot in there, who's normally flying on an autopilot, is indeed looking after the damn engine, the art of flying. He only comes in if you need him. Otherwise, he really has no job on that flight. So the part I'm trying to make is we really need to look at the softer aspects. Coming back to the blockchain initiative that you talked about, there are several players. I speak for India, for instance. There are non-bank financial companies catering to that segment. There are NGOs who are catering to that segment. Yes, there are many such cases on title deeds and other things which are already prevalent. But what is more important is we don't have a concerted supply chain linkage on blockchain where there is a body that comes together, creates an initiative, and puts in these markets people together. So what we are seeing is an evolution, I think. This is the maturity of the process. As part of the evolution, we've got chaos. Now, whether it's GDPR or whether it's things, I think everything comes with a certain amount of sequence. And which is why I brought in the economic, financial, and some of the other benefits that come with social and political reasons. I have a belief that cryptocurrency is needed for many other reasons. The kind of stimulus we have in this world, we cannot continue with a high interest rate.
Crypto make the world flatter.
Yes, in fact, we're going to head to negative interest rates. I know the US Fed fiercely says we never will do that because today they can't afford to do that. But gradually, as you move to a digital currency, that's the only way you can do it. Even in Europe, where you're doing about minus 75 basis points to 100 basis points, if you go negative beyond that, people will keep money physically under the mattress or keep it in a vault. So to be effective in a market where we've got so much stimulus and the only solution our governments have, unfortunately, is to print more money, we are all a generation of people living on candy. Try taking candy away from a kid who's grown up in candy, and there's going to be depression. So we clearly can't get out of it. So there are several reasons why you have the emergence of this technology. Blockchain was around forever. So many of these technologies are not new. They're just being talked about newly now because it's important and relevant to include people. So please, I think we need to understand whether it's digital identity, federated or sovereign, whether it is social media, it had a purpose, whether it is imaging and facial recognition. We went to get our biometrics done. None of us went to get our facial recognition done. It was scraped off websites and it was just automatically taken. I think our digital, the health records of ours are going to become increasingly public. So none of us can wish away data. Yes, definitely we need the blockchain initiative. What we need is a community initiative of the nature you talked about in that small example. But why did India succeed on the NCPI or the UPI, which is really talked about as a success? Because they built a body and built a regulatory framework and had everyone adopt together. Yeah. Today it's a success. So I think every country needs to understand.
And it has trust as well.
Yes. Unfortunately, regulators are misaligned. Yeah. Unfortunately, within a country, the different regulators are misaligned. Everyone has agendas. Politicians are misaligned. Everyone has their agendas. And at the same time, human beings are unfortunately largely unaware. They are all, today 99% of the people, common people like us, are educated by WhatsApp. And most of us end up being targets of this weaponized social media. So we believe what we are told, and we often herd together with people we like, and we herd together with people who have similar views. So we don't have a forum where somebody needs to take, a more balanced view. So I think we need a regulatory framework. Mm-hmm. We need somebody to set up a multi-party, multi-stakeholder ecosystem where people can plug in, and eventually blockchain is the solution because it becomes a distributed ledger, because the fact that it creates the efficiencies that Sagheer talked about, the costs are very high, the reconciliations are automatic, the cost of servicing low-end clients is extremely high, the opportunity is extremely high, the cost is low.
But if you look at Poland, Switzerland, even Chile, they're beginning to use blockchain as a platform, not just for driving verification at a government level, but actually for trading in the capital markets with new platforms. Blockchain is being used to drive more trading volume for the markets as well. So blockchain isn't going to go away. But I liked what you said about, it's a topic for another day, the avalanche of big tech coming in around how freedom of information is perhaps being taken a step further away than we had imagined. And there's some who would say in the media, it's not my quote, they say freedom of speech does not mean freedom of reach. Okay? And we're trying to get to, in this discussion, freedom of financial inclusion. In fact, when we spoke earlier, you said, how do we get to a point where it's inclusion, period, not just financial inclusion? Okay? So, James, you get the easy one now, after a question on blockchain with Sagheer and Rajeev. It's actually pretty simple. When you look at your world today in financial crime, professionally, how do you see blockchain coming? Are there any examples you could share with blockchain specifically on how digital identity is beginning to be managed better in forensic crime?
Yeah, and I agree, first of all, with a lot of the points that have been made. We'll perhaps come back to the point around regulation, which I agree with. Cryptocurrency is a good place to start in terms of that specific question, right? So there is, in some parts, a sort of misunderstanding, lack of understanding around what cryptocurrency is. For example, if I come to the financial crime question, how that could be abused, right, for the sake of value transfer from one place to another outside of the supposedly legitimate or traditional financial system. So blockchain sometimes gets lumped in my view, with that type of situation, right? So we can come up with examples of, of various. Silk Road is an example, for, if you like, of where a significant amount of criminal activity might have been undertaken and blockchain was potentially used. That doesn't mean that blockchain is the problem. It doesn't mean that the technology is flawed, and it doesn't mean at all, actually, that by entering data into the blockchain as a general sense, you are exposing yourself to a level of risk. In fact, quite the opposite. I think, in my view, blockchain has a fundamental role to play in improving the trust that we've talked about several times already. Conversely, if I take one example, so that the ability to create and validate and verify simple documentation, and to ensure that the blockchain is fundamental in keeping that secure. So traditional sort of analog world, we're printing out documents or copies of passports, and we're asking senior people to notarize documents and so on and so forth. That's the world that we've been in from a financial crime compliance perspective. Blockchain has the capability to change that, and to mean that documents, are stored in such a way or used in such a way that the verification is inherent. I would look at that then from the perspective of growth, the resources that could be released from their current roles, as Rajeev pointed out, sort of back office roles in terms of processing and so on and so forth. And you asked me about statistics before, and I've taken it personally, so I can give you lots of statistics, right? Even if I've made some of them up, but you won't know.
It's okay if you make them up.
So fair enough.
We prefer you make
lies, damn lies, and statistics. Right? So McKinsey came out with a study, and they said that the cost of onboarding could be reduced by up to 90% if we were using things like blockchain and digital identity, because the simple act of human processing and all of the risk and concern that goes with it could be eliminated, so that trust becomes inherent. Conversely, I'll give you another statistic, right? So there is an estimate, 0.5% of GDP in the Eurozone is spent on issuing and managing cash. Mm-hmm. So removing cash from the equation, albeit that may be some way off, but that seems to be a little bit the direction of travel. Not only does that save a huge amount of cost, but actually it removes a significant financial crime risk. So, cash is not traceable, unless you have very, very sophisticated technologies to be able to see who's handled it and what's on it. But by comparison to cryptocurrency or to a blockchain-based system, there's a completely different risk profile to that type of activity. Now, that does mean that we don't need to sort of ship submarines full of cash from Mexico to North America anymore, because the money laundering process doesn't necessarily involve hard currency. But that is a different risk, and that's, to my mind, not associated with the inherent qualities of blockchain. It's a different point.
Okay, well, keep that thought there, James, because it will probably lead you on to digital currencies next, which is the next question on identity. Many of us have seen how our digital identity is going to become even more relevant to how our to-be vaccination passports may be looked at in different economies. Okay, but there is something that you've touched on briefly, and you've mentioned it as well, around how you'd like to look at financing on land and other areas with blockchain, is the aggregation of these data insights and how it gets to be scored can drive schemes like Sesame from China, in which they've decided, based on the scorings that customers have, what parts of the city they could probably go to, or even which countries they don't need to apply for visas either. So there is this other side to scoring and data and identity that we don't always talk about because we're not there yet. But I know Sagheer 5 years ago used to say, I've got so much data in the bank, I can't see all of it. I don't know what it says. But there's this need, that, to your point, of how we are mindful of how we're going to take that data, not just because we want to turn this into a data conversation, because data and trust and identity all come together. If you look at what the Kenyans did, and you know this very well, they didn't allow for DNA and location services to be held against your digital identity profile. Okay, so modern concept, browsing history, not being kept for your digital identity of what you were doing online. The question, though, is now you're going to go to digital currencies in China. Okay, so China's at the forefront of this today. So Rajeev, the question for you is one that I'm sure you talk about many times with your friends as bankers, which is that, I mean, not many people know this, but China actually invented currency, period, during the 7th century. During the Tang Dynasty, China invented paper currency. Yet here they are inventing digital currencies, CBDCs, where the Chinese People's Bank of China governor, Yi Gang, is on record saying more than 2 billion yuan has been spent using China's new digital currency in 4 million separate transactions last year. Okay, that may not amount to more than $300 million, but it's $300 million with a CBDC that not many of us still understand. Okay, so Rajeev, you get to take first go at this, which is, given what we know already about crypto, and that crypto could be a bigger driver than microfinance or financial inclusion, and I think all of us agree to that potentially, given what has been said already about trust and about transparency and about how we can embrace blockchain, how do you see CBDC being embraced, and how do you see CBDCs beginning to affect the paradigm of financial inclusion, without us having a chat about, is it the US dollar or is it some other currency?
So it's a market I'm very familiar with, China. We spent a lot of time working there. If there's a country that is ahead on the use of digital currencies, or in any shape or form, then perhaps it's China. When it comes to fintech adoption, when it comes to the level of digital transactions being done either through WeChat or done through any of the other Alibaba, etc., I think it's one of the countries that's far, 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 far more developed. And so clearly, if you also look at China's, the way I look at it, I'm not speaking for China, but the way I see China, they work on a concerted plan. So since you also briefly touched upon the US dollar and its supremacy, I think everything happens for certain well-concerted reasons. I mean, the US dollar also is a reserve currency for certain reasons, because the oil is pegged to the dollar, funds transfer is typically done on the dollar, and interest rate yield curve everywhere in the world is dollar, and gold is also traded in dollar terms. So obviously there's a lot of friction on currency exchange. There is a need to buy and sell dollars worth billions and trillions every day, just by nature of the fact that that's how the treaties have been worked on. So if you recall, I said in the beginning, no longer are reasons run by economic and financial reasons, but social and political. We've been addressing the social aspects a lot in this discussion. But now you're getting into the political end, where people have to build a concerted reason.
Relative to financial inclusion.
Yes, it's relative to financial inclusion, because eventually financial inclusion itself goes beyond just the people at the base of the pyramid. I think financial inclusion also is talking about the supply chains, the small businesses, the link and the integration of people into the mainstream, and getting people to not just get money to the low end or get money to people who otherwise have not got access to it, but also be able to take the friction away from some of the traditional channels. So I think if I look at CBDC or I look at any of the opportunities, I think the US dollar obviously will be under constant threat on its position as a reserve currency by the very fact that it's the incumbent. And if there is any insurgent who can go out and get that position, I think I can't think of any other alternative other than the Chinese yuan. Because they've also announced that if there is going to be a fiat currency which is digital, then the only country that has officially declared that there will be a fiat digital currency and they're working on it, is China. China is also, if you look across, has done a lot to include itself. So I'm going to use inclusion in a slightly different way. Financial inclusion even in systems. China Union Pay. They have created bilateral arrangements across the world where cards get accepted and payments get done. Bilateral loans, One Belt, One Road initiative. That's economic inclusion, right? By just cutting through a road, making sure that people in those places get involved. How they've given out emergency aid, and it's given in yuan. How swaps have been created, bilateral swaps have been created between countries. That's also in yuan to whatever. So you're seeing, and of course now stock exchanges and capital markets, as you're seeing, a lot of companies start listing in dual exchanges. And if there are two parts of capital market sources which are very large in this market, it's China and it's the US. So the New York and China will remain the money centers. Now, when you look at inclusion, and I'm looking at inclusion far beyond just the base of the pyramid, till we include or become inclusive in the broader financial system, you can't possibly start including people at the base of the pyramid. Because then I think we're doing a lot of ticking of boxes and just feeling good about it and just making sure someone has a small bank account but doesn't get anything out of it. We need efficiency. I think it's good to have another counteracting force. And it can also, I think there are lots and lots of powers who would be happy to see themselves freed from the pressures of a sanction. So the moment you have a very powerful cryptocurrency, then you can actually bypass the US banking system technically, and you can actually get away from sanctions. So obviously there is a lot of pressure to ensuring that there's adherence. So when you're talking about something of that nature, the one thing that is very important again is the lack of sufficient transparency, governance, and trust in the Chinese system. I'm not saying that they're not a good system. I have no reason to say otherwise. But there is a perceived gap there because you're talking about two different regimes. One is a democracy and one is a autocratic government-led country. Both very successful models. You can't say which is good or bad. But the fact is, to be able to include yourself, I think there's an equal responsibility to make yourself the responsible player. So if you are going to be dominant in anything, I think it comes with responsibility. Yeah. And you talk about freedom of speech, but freedom of speech is a very important thing, but it comes with the freedom of responsibility. I mean, an important obligation of being responsible about what you say. Factual and responsible. You don't say things to hurt someone. But I think there's also another issue. There are strong commercial reasons, forget political reasons. Banks themselves don't really want cryptocurrency to succeed. I mean, technically, it's a straight-out way by which you're disintermediating banks. And technically, banks have been the intermediaries between people who want to borrow and people who want to lend. So if without regulation, there are only a bunch of mavericks out there and people who are willing to put a few $1 billion to start these enterprises, I think we started a movement. No different than how social media started as a fun thing, has actually taken over our identities. I don't know which crypto will do well, whether it's Ethereum, whether it's stablecoin, whether it's Bitcoin or whatever, but I do know that cryptocurrency will become important. It's very important for its success. that regulation comes in. Because the moment regulation comes in, the amount of investor money that will come into the development of the ecosystem will be so rapid and fast that the adoption will happen.
Coming to you for a similar question, not on Sino-Pakistani relationships, but on the fact that it's well documented that 6.7 billion US dollars was invested by China in different projects across Pakistan.
Yep.
Okay, and I would love to talk more about the agility of the consultants that turn up from China at your doorstep and the ideas they have of connecting APIs and helping the pipes show what works and what doesn't work. But global trade is still important for Pakistan. Global trade volumes have been erratic in the last 12 months in many different ways. And given some difficult IMF discussions that may be ahead, when you look at HBL involved in the fray, not just with the ripples of what the investment is doing in a country with over 200 million people, but how do you see financial inclusion and digital currencies playing out in Pakistan?
That's a tough one, because linking it directly to financial inclusion is hard, but I'll take a go at it.
Sure.
But for full disclosure, HBL is very clear in its view. Pakistan is our home country. China is our second home country.
Yeah.
And we back that up that we've had an operation in Urumqi for many years. And next month, we're going to be launching our operation in Beijing. We are the only South Asian bank which has full license to do operations, local currency and foreign currency in
The
China.
next month you're launching a new operation there.
Sorry?
You're launching a new operation there.
Well, yeah, we've been given a license for opening an office, a full office in Beijing. So we are very much keen on the relationship with China for our organization. And what you've said about the country, yes, the country has a relationship also. How does it affect financial inclusion? So let me talk about two things. Trade, but in Pakistan case also remittances. The reason is that both of them are pretty much having the same weight in our foreign currency flows. And we see both of them growing. The investments which have been made in Pakistan on projects, whether they're China-led or Pakistan-led with the support of China, has led to greater employment. It has led to capacity building in the country, power capacity. Because you can't run industry without power, or you can't run industry without the right price point of power. It has led to a lot of companies setting up new projects, be it in textiles, be it in, we are big in healthcare, believe it or not. We export a lot of surgical instruments. We export a lot of leather. I'm happy to tell you that we make all the footballs for all the major games in the world. So diverse industries, right? Now these industries are benefiting from some of these investments, but then there's a supply chain event. If there's a road construction, labor gets benefited. The person making brick gets benefited. The cement plants gets benefited. So there is definitely throughout the economy a positive impact which will lead to improvement in financial inclusion, which will lead to people getting job opportunity. Rajeev rightly pointed out earlier on, in some our part of the world, underemployment and unemployment both are a challenge. And some of those issues start getting tackled when you have growth rates of higher amounts. So in our case, our exports this year are expected to go up 10 to 15%. Our remittances are expected to go up 10 to 20%. So you're talking about both of them starting to be, for example, our remittances were about $23 billion or $24 billion. We're looking at $27 to $28 billion of remittances. Now, those things help. The money for remittances goes where? Directly into the rural areas. A lot of it goes across the country to the small towns and the medium towns. So we see economic growth, we see inclusion getting positively impacted because of our economic activity, which in part is fueled by the transactions with China.
So has the State Bank got a view on digital currencies for Pakistan?
State Bank, definitely. Well, State Bank for now has a view and a very conservative view. State Bank is in line with many other central banks in the region where they want to understand digital currencies better, and they still are not comfortable dealing with something which does not have a support of last resort, lender of last resort. And that is an issue. I think in addition to regulations, someone will have to own it. Someone will have to say, I'm behind. Elan Works did it in the corporate sector, so to speak, by doing that one big transaction.
Yeah.
I think for digital currencies, there needs to be not just regulation, but some entity which says, I'm willing to back this all the way. So State Bank is still watching. State Bank has a conservative view on digital currencies for now.
Okay, so I've heard CBDCs are here to stay. I've heard they do help drive financial inclusion, but there's a lot of work and regulation needed, and a lot of work still needed on tempering some of the political dialogue around this as well. But identity is very much a beneficiary, would you agree, of CBDCs?
Yes.
Okay, identity is a beneficiary. It drives from the 1.7 billion more financial inclusion. James, I'm again not trying to rush you here, but we are short on time now at the end. Coming to you with the last question, again, building on what Rajeev and Sagheer both said, there's an element, again, going back to the same old chestnut with you, on financial inclusion and forensic crime, which is around how do you restore trust and confidence to drive more financial inclusion again? So when you look at digital currencies and what the Republic of China has clearly done very successfully in beginning to prove that you can submit remittances and payments in digital currencies and it's acknowledged and recognized, how do you see any adoption opportunities for reducing financial crime with CBDCs?
I think CBDCs, as opposed to non-CBDCs, you do have some sort of trust-based advantages, right? There is more incentive, obviously, for a central bank to invest in greater infrastructure and control and regulation that goes with the currency than perhaps there is for other types of digital currency. So it would seem to me that a central bank-led currency has that advantage at least. There's probably an argument around whether the emergence of CBDCs is as a result of threats to domestic currencies rather than joining a market or a future direction. But I think from a financial crime perspective, it's probably amongst the same things we talked about before. Inherently, people will probably, absent a lot of information to the contrary, have a greater confidence in a CBDC than they will in something which doesn't have a sort of a local home, if you like, or an issuing regulator. Regulation has to be part of that, as we've said along, and clearly linking a central bank to regulation in a particular country is going to have that effect as well. And that has to develop. From a financial crime perspective, it's almost impossible for regulation to stay up to speed with what's going on in the types of issues that we've talked about and the development of fintech and the development of digital
Would you
currencies.
say CBDCs would help drop the 4 billion forensic crime, financial crime number potentially because identity is more trusted?
Well, I've got to catch up with you afterwards on the 4 billion. I think the number is miles higher than that in terms of financial
I was
crime.
hoping you'd make up a number and tell me a number then.
24.763% of statistics are made up. So, but I would go to the 5% of GDP because I think whether that's right or wrong, that's indicative of the size of the problem of things like money laundering. And that's what we're talking about with financial crime. Money laundering is the proceeds of crime. So by definition, something's had to have happened before that. Do I think CBDCs will bring an extra level of confidence? Yes. Do I think that means that financial crime will inherently drop? No. I think so criminal activity is not a technology thing. It is a human issue. And as a colleague of mine used to say repeatedly, there's never been an outbreak of honesty, right? So people will find a way.
It'd be nice though if it happens.
It would. And again, I don't mean this to sound negative. It isn't negative. This is the challenge. This is the fun, if you like, of trying to keep up with what people are doing. This is why data analysis and sharing of data and observing, using a digital currency to map trends and patterns and see what's happening. Where is the currency moving from? Where's it going to? Who's involved? Who's not? That type of data analysis is where you get into the nuts and bolts of financial crime prevention. And that is not currently done well enough for all the reasons we've talked about because it's quite silent. So I do think it will bring new opportunities. I think it will bring a level of confidence, but I don't think fundamentally it will change human nature, which is unfortunately looking for those types of opportunities. But what blockchain and distributed ledger technology does is provide an opportunity for much greater visibility and control and investigation, frankly speaking.
So what we need then is an outbreak of honesty.
Correct.
Back to what your colleague said earlier. Look, I'm again wrapping up here now with some of your thoughts and ideas. I want to give one small plug though to something we didn't talk about, which was the Pan-Canadian Trust Framework, which is piloted by the Digital ID Authentication Council of Canada. It draws on several sovereign identity themes, and Canada has been investing also in a cashless national rail program as well, with the likes of SIA, with the likes of Vocalink, and they are making progress in how all these components come together. Okay, so that's the small plug for Canada and what they're doing. To wrap up, Sagheer, you mentioned earlier there were 4 billion people with access to the internet.
Yep, that's the number I have.
Right, that's the number you have. So I kind of had something very similar, but what I did have was that the market capitalization of banking last year crossed something like 6 trillion. Would you agree?
Perhaps.
Sounds about right. So
It was a bad year.
bad year. Okay. Well, given that those numbers are only going north at this point in time, and given that, Rajeev, you mentioned we need to be mindful of how it could go the other way as well if we're not careful. Okay. It's clear that we're living in interesting times with CBDCs, with a lot of the work that you mentioned that's happening with blockchain already, what we could learn from the likes of Thailand and other geographies. And it's clear that federated identity, sovereign identity, is going to continue being relevant to our national agendas, draw up the concept of identity for us. And the fact that Kenya went ahead and said you can't collect certain types of data to create that identity profile means that some of the concerns you raise are very much in the minds of those who practice jurisprudence in some jurisdictions. Okay, so I want to get to a quote. Given we've all been very flowery with our compliments on China's progress at different times, I found a quote from a Chinese author whose name, I hope I don't mispronounce this, Liu Qichin. And he basically wrote a book a few years ago called The Three-Body Problem. And he recently wrote another book called The Dark Forest. Now, they're very successful books around science fiction in China. And as a popular science fiction author, he said in a quote in The Dark Forest, "The ultimate crisis that Earth is now facing means that open technology is the unavoidable responsibility that advanced countries have to all humanity." Okay, I quite like that one. Okay, made me think about what did he mean by humanity in that. But it's quite clear that people are very much on the same page as some of the ideas and notions you've shared as well of how technology cannot be seen as only possible for great and positive objectives. It has to be regulated. So, given that we're definitely out of time by a substantial margin, okay, I'd just like to say thank you very much, Sagheer, Rajeev, and James, for your time, for being present today, for sharing your insights and your time as well with us today. We'll talk afterwards about what's the price of Bitcoin by next week. But can I also thank Capital Club Dubai for hosting us today and allowing us to have the discussion here with all of you present. And to all of you for listening and following us, thank you very much. And till next time, goodbye.